Moving on, Basant Maheshwari, the author and portfolio manager, Basant Maheshwari Wealth Advisors, spoke to ET Now earlier today. These are the pearls of wisdom from him. Okay, Basant, I'm sorry for that. I want to just get your views right now on you say avoid any kachra and chakra stocks. What does that mean?
Good to be with you again. I mean, kachra and chakri is what we say in the stock market parlance. It refers to low quality stocks, the small caps, the hope stocks, as I might call them, because you buy a stock at the peak of a bull market and then you tell the other guys to buy. So it's a self-fulfilling prophecy, because more people buy the stock, it goes up, and because it goes up, more people buy the stock. And with these stocks, we've always seen that I've seen that investors realize over a period of time that their longevity is dependent on the longevity of the stocks that they buy. So if you're buying a stock for 6 months, you'll survive the market for 6 months. If you're buying a stock for 3 months, you'll survive the market for 3 months. So this was the frenzy which we saw in the earlier part of this year, where most of the useless, hopeless, and the worthless stocks were going up. And at that time, it was all over. You buy a stock at 20, it goes to 30, it goes to 35. People didn't realize that it's not just return on capital, it's also return off capital. So those are the companies, because now the market has become very narrow. It's a pre-election year, and the market, for my money, is not discounting Narendra Modi not coming back next year, which looks quite a likelihood, because there's one thing of a fight of one with many, but right now it's becoming a fight of one with one, where the opposition gangs up against the BJP. And that'll be very difficult to fend off. So in that kind of a situation, people have to be with high quality, pay a little more, get the best thing available in the market, and try and survive this period.
So then would you say that, maybe the time is ripe to only be with blue chips, and the small cap, mid cap story, at least till the verdict of the 2019 elections is with us, is avoidable? There has been a lot of discussion about how the broader markets are overvalued.
No, Ananta, it's not a question of small and mid caps being avoided. It's a question, if you find a mid cap which really high quality, you can go and buy them. What's the problem? The problem, you could have a large cap which is becoming a micro cap right now, Vakrangi. So it was a large cap, it's now becoming a micro cap. So when I say go and buy large cap, it doesn't mean you buy a Vakrangi. Of course, with the benefit of hindsight. It just means you have to buy companies where you have a basic hypothesis that this company is going to be available over the next 2, 3, 4, 5, 6 years, doing the business right the way it is doing it now. So it's not a focus only on the large caps or the blue chips. Nobody became rich buying blue chips. We all know that. But if you see what's happening in America, companies with $900 billion of market cap are growing at 20-30%. The FANG stocks, as we say, Facebook, Apple, Google, Netflix, those are huge companies. So there is no sin in buying large caps and making money out of them. It's happening in the West. So the days where only the small caps used to make money are behind us, because these days it's become a game of scale and size. So once you achieve scale and size, you are able to dominate over your competitors, push them out. And what the government has done by the GST and the organized sector stress, they have ensured that the big becomes bigger and the small gets smaller. So because of that, it's just about the quality of the companies. I have no biasness towards large caps or mid caps, or I'm not anti the small caps, but you can find a kachra in a large cap also. So what needs to be done is we have to buy companies where you can look at sustainable growth. So that's the format which we follow right now.
Mr. Maheshwari, at a market that we're currently looking at, given so much uncertainty, so much volatility, a lot of political developments that are lying ahead of us, what are some spaces and some segments that you see good quality and good earnings visibility in the medium to long term?
So two things. First, money has been made because of the government and in spite of the government over the last 25-30 years. Just because we had a great government didn't mean we made a lot of money. People have made money in coalition governments also. So the government thing is a temporary phenomena, and it affects only a certain class of the market. What is more important is about companies that can grow in spite of what the government does. So when you come to that, just to push the thing in front of you. So about 8 months back, people were saying buy the PSU banks because they are cheaper on a price to book basis. So 8 months into this entire theory, now we realize there is no book and there's only a bank. That too, we don't know how long this bank is going to survive. So secondly, when 25% of your PSU lending capacity has been constrained because of the RBI's restrictions on them to be lending, but there's a business to be done. So the business automatically flows to the private sectors. So the private sector banks, that's the normal cliched thing which everybody keeps talking about. So the best NBFC, for example, we own them and it's hitting an all-time high almost every week. So the best retailing company, it's also hitting an all-time high. So the housing finance space, that has taken a bit of a problem over the last 3, 4, 5 months because one investor wants to exit and one wants to come in and all that. But over a period of next 3, 4, 5 years, if you have a view as long as that, because unless you have a view of 5 years, you can't sustain the market for 5 years, and you have to sustain the market. So it is these spaces, like for the FMCG names, I don't fancy the FMCG names. We don't buy them, the levers and the Colgates, because we don't want to be paying 40p for a 15% grower. So it's back to economics, it's back to business models, it's back to earnings growth, and these are the companies which are going to help you in case, dare I say that, in case Mamata Banerjee or Chandrababu Naidu in a coalition government of 15 parties, some from outside, some from inside, some from within, some pulling the pants, some pulling the chair. Visualize a situation like that. I think the portfolios have to get adjusted to that kind of a shock. I'm not saying that's going to come, but in case it comes, there'll be very little for anybody to do. So we have to prepare for that kind of an eventuality, because the screen doesn't tell you that it's discounting that.
Basant, Mr. Maheshwari, if I can take that forward, with what you're saying, whether, Modi versus the rest, what I want to ask, this is a DII's market. The FIIs have been selling off. You're saying that even the domestic institutional investors need to prepare for this root shock. How are people supposed to do that? Is it just sectoral rejigging that is supposed to take place? The FIIs have anyway been leaving the Indian stock markets.
So two things again. First is the entire infrastructure boom over the last 2 years in the stock market, obviously I'm saying, has been fueled by what Mr. Gadkari is doing across the projects. So if Mr. Gadkari is not there, then what happens to these infra stocks? And they've not come down 20-30% just like that. The market always runs ahead. They have come down, a 1200 stock has come down to 850 because the market says, hey, wait a minute, what if this policy isn't around next year? What if Bharatmala isn't around? So I'm not creating a scary scenario here. I'm saying people have to be aware of that eventuality. Secondly, and more importantly, the DII investors are basically a know-nothing investor. I mean, it's the retail guy who writes a 5,000 SIP check every day, every month, whatever. And his interest in the market is dependent on what his NAV is doing. He doesn't have a long-term view if the NAV starts to fall. So we might, if in case the NAV doesn't reflect the current environment. So there's a big thing about this investor, because the DII, the normal domestic investor isn't the all-knowing investor. He has a long-term view, but his long-term view is dependent on price. It's not dependent on value, because had he had this yardstick of computing value as most people claim to do, he wouldn't have been through the mutual fund route. He would have been buying stocks on his own. So when markets start to come down, obviously whenever we had a demonetization, it came down, and in 3 months it went up. We had a GST impact, it came down, it went up. In a Brexit, it came down, it went up. So this has been a long grind where we are down for 6-7 months and still we are grappling with the situation right now. So the domestic investor is yet to be tested on how strongly he believes the India story. It's good to write about the India story on Twitter, and it's another thing to be holding on to your units when the NAV is falling.
Well, interesting perspective, Mr. Maheshwari. It was a pleasure chatting with you and getting, to know what you feel and how you would want to recommend people to approach markets at this point of time. Thanks a lot for taking time out and chatting with us.